In recent days, Tesla stock has went from, okay, we're having a bad 2024, to just close your eyes and wake me up when it's over with. And unfortunately, this broad market weakness, crash if you will, has went from bad to worse following Netflix's earnings here in after hours. And in fact, if I were a shareholder of Netflix, I would be very happy with this report. But yet Netflix stock is down about 5% in after hours. This is dragging down Tesla another half of 1%. This is dragging down the Nasdaq over a tenth of 1% and other big tech names. We need to talk. We need to discuss the path forward for our markets and for Tesla. Am I bullish? Am I bearish? I mean, I was bearish for a while, and maybe I still am. You'll have to wait and see and find out. But you've already fallen about 6% on the Nasdaq from all-time highs. Do we get a bounce soon? Do we fall more? I have all of that information for you in this video, and where Tesla's stock could be going next, specifically with Tesla. Do I think the stock is still going to rally on earnings? Or do I think we should literally close our eyes and wait for a better moment? Is this a good buying opportunity? I have so much info for you here in this video. I hope you're ready for it all. In the meantime, hit the like button and subscribe to the channel. While you get ready, you grab yourself a coffee, a beer, whatever you like to drink or consume. Sit back and relax, and let's go ahead and get started. So I'm going to start with this. If you guys are everyday viewers of the channel, you already knew that I was quite negative this week for earnings. We had ASML, we had TSMC, and we had Netflix. I was negative on all of them. What happened? They all fell after earnings. ASML arguably had the worst earnings. Netflix was the best, and TSMC was kind of in the middle, if you will. But all of those stocks fell. And there was a simple logic. Keep it so simple, it's stupid. If the stock's trading near all-time highs, you have to come in with an incredible earnings, incredible guidance, or in this market environment, you're going to fall. Your stock is not going to be rewarded for mediocre earnings. And even if some metrics are really good, if there's just a couple of different areas that are bad, or even one for that matter, in the case of Netflix, your stock is vulnerable to fall at least 5%. If not 20+%. Also worth mentioning, you have the 10-year treasury yield that has been going absolutely parabolic in recent weeks, now sitting at about 4.64%. This is screaming to money managers. On any weakness of big tech or markets, just put your money into 10-year treasuries. You're making almost 5% risk-free. So I think the 10-year treasury yield where it is one of those things that it's kind of like an alternative to markets right now. And if you're not going to put up impressive numbers, you always have the 10-year treasury yield to fall back on. So let's start with Netflix's earnings. If I were a shareholder of Netflix, I would be very excited with the earnings that were just reported, specifically the subscriber numbers. So Netflix added 9.33 million subscribers in this last quarter in Q1. They were expected to do anywhere from 4.5 to 5.48 million, depending on what, the estimate was from different areas. This one's from FactSet. There was other estimates that were as low as 4.5 million subscribers. Either way, they beat huge on subscribers. That didn't even matter. Netflix has 269.6 million total subscribers. EPS came in at $5.28 a share on sales of $9.37 billion in Q1. Analysts had modeled earnings of $4.52 a share, so they beat huge there as well. Almost 80-cent beat. And they modeled revenue of $9.28 billion. So a beat across the board, strong so far. Netflix is down 5% in after hours because of their Q2 guidance, which you just have to laugh at this. It's just incredible. Wall Street has a mind of its own. Netflix forecast earnings of $4.68 a share on sales of $9.49 billion. Wall Street was looking for EPS of $4.54 a share, so they actually guided up on EPS. But total sales were expected to be about $9.52 billion. So they guided down anywhere from $20 to $30 million for Q2, and everything else beat huge. And the stock's down 5% in after hours. I am honestly very concerned for next week, because if Wall Street's going to do this to Netflix on this strong of a report, what happens with Microsoft, with Amazon or Google or Apple, which is certainly going to give you probably much worse numbers than this. And that is a big reason, really the reason, why Tesla is down 0.5% here in after hours, and the NASDAQ is down almost 0.1%. These first, big tech earnings, these AI earnings, if you will, TSMC, ASML, these first earnings, they're kind of a bellwether of what could be to come in earnings season. And when I just think about the companies that have reported this week, last week was JP Morgan, Citi, those stocks got crushed. ASML got crushed, TSMC got crushed, Netflix got crushed. The writing's on the wall here for further pain and downside in markets. The reason for that is simple. Expectations are too high. You need to reset expectations. And when your big tech stocks, the stocks that have really been the ones that have led the markets higher in 2024, they're sitting at close to all-time highs. It's going to be very hard for any of them to impress Wall Street. I mean, if Netflix's report didn't impress Wall Street at all, I'm not confident in any other big tech names, and they control the weighting of the broader market. So if they have disappointing numbers, or even just meeting numbers and not really exceeding them, that's problematic for markets, let alone if you have any of your big tech names that come out with bad numbers. That's a whole different story. That could be much worse. And here you can see the percent of stocks above their 50-day moving average. I'm pointing this out because ever since 2024 started, you've actually seen the average stock decline, but the markets have done very well because of this concentration in big tech. Now it's big tech's turn to, either continue to hold up markets or maybe see a bit of a rotation out of big tech and into other areas. Which, unfortunately, for those of you guys that are super bullish, next week doesn't look great so far. And like I said previously here in this video, keep it so simple it's stupid. High quality companies that are profitable, that have gotten beaten down in 2024, are probably going to do well this earnings season. Vice versa, companies that have done really well in 2024, that have held the markets together, they're probably not going to do so well. And again, those are your big tech names, so expect more downside for our markets. But you are getting to a point where the RSI is at 35.47. And if you take a look at the you're getting pretty close to index. 30. It 1 week ago, you were at 46, if you did see a short-term bounce. Today, you're at stabilization around this 100-day moving average, which on the triple Qs, the NASDAQ basically halfway between extreme fear and neutral. So I would expect there could still be some downside here, right? Judging off of $2 away from that 100-day moving index. Although I would expect to find extreme fear, it doesn't mean you have to bounce. Until you get into, so deeper into next week and you actually get your big tech names. So be a little bit careful going in puts here. You're already down 6% from all-time highs, but I do think you could at least fall another 6%. That would take you down to your 200-day moving average. And that's kind of my base case at this point, just given what we've seen so far with earnings. If we take a look at the most recent AI investor sentiment survey, the bulls are trying to hold on a little bit here. You dropped from 43.4% of investors that were bullish. Now you're sitting at 38.3%. Not a huge drop there, a considerable drop nonetheless, about 5%. But they're still trying to hold on. Neutral investors fell from 32.5% to 27.8%. But look at the bears. And keep in mind, this survey came out yesterday. Bears jumped 10% from 24% to 34%. So you have seen market participants get or noticeably, more bearish in just the last week. Worth mentioning, you do have Fed Goolsbee that speaks tomorrow morning at 10:30 a.m. Eastern Standard Time. And anything the Fed says here that kind of reiterates higher for longer or rate cuts not coming until the end of the year, it's not really going to be a huge deal, because if we look at what the markets are currently pricing for Fed policy, well, it's just not great. And that's a huge reason why your average stock has actually fallen in 2024. 2024 has only been a good year for really the top quadrants of our markets, as I showed you with the percent of stocks above their 50-day moving average. If you're seeing a broad-based rally, that percentage of 50-day percentage of stocks above their 50-day moving average, as you see here, would be a lot higher. You peaked out at 86% at the end of 2023. Obviously, it's not going to go to 100, but when you fall like this throughout 2024, like you have, it's not necessarily a good sign. And that's because we went from pricing in the first rate cut in March and pricing in 6 of them in 2024. Now you're expecting the first cut to come in September, 45.6% odds, and then you're expecting a continued pause in November, and then you're expecting, actually now, only one cut in September. December keeps going back and forth between pricing in a cut and pricing in a continued hold, but anything the Fed speakers say that maybe says no rate cuts in 2024 could be bearish. And if they start to bring up the conversation of raising rates again, that would be really bearish. I'm not expecting that tomorrow, but it is possible that you start to get more signs of that. And the markets, well, you're not priced for a hike. You're not even priced for conversation around a potential hike, let alone a hike itself. You do have some earnings coming out tomorrow morning. The only one that's really going to be important, maybe for markets, is American Express. And that just could be important if the company says consumers are spending money or pulling back. The general thesis is you want to be bullish in stocks right now because people are just going to keep spending money. Even if they're just going into debt, spending money on credit cards, they're still spending money. Anything that challenges that narrative could cause weaker markets. Here on the day today for Tesla stock via big money, these are hedge funds, institutions, money managers. They are called unusual options trades. They are not from retail. You see this trade is $28 million, $7.5 million, $18 million. Retail investors are not making those trades, okay? If you are, well, hit that little donation button or thank you button, whatever it is, and, give me a little bit, okay? If you're making $7 million Tesla trades, you might as well send a little thank you. But jokes aside, you can see today, 955 different trades totaling $1.94 billion with a positive order value of 59%. So today was actually more positive than negative on a pretty big dollar day for Tesla options. $2 billion is quite large, and 59% of that being positive, well, that's pretty dang good. As you can see here, short sellers continue to keep up the pressure with 3.89% short interest off free float. Almost $17 billion currently sold short in Tesla, and almost 108 million shares that are currently sold short as well. Cost to borrow fees today sitting at about 10%, which again suggests there was a lot of shorting activity that took place today. Tesla is fed up at this point. A lot of this doesn't make sense to people, what's going on with Tesla, and I don't think it's supposed to, right? I think if you're bullish on a stock and the stock gets decimated like Tesla has, you are the contrarian, okay? You're contrarian if you're bullish right now in Tesla because the overall narrative is negative. Now, I think long-term that sets you up to make a lot of money, right? As long as nothing dramatically changes with the business for the worse. But even in the short term, I think you're set up for an upside surprise in Tesla. Because as I have mentioned before, Tesla is priced as if the business is dying, okay? The Model 2 is, quote unquote, canceled. Robotaxis are never coming. Sure, Tesla is down year over year on deliveries. That's not great. Energy business, who cares about that? Nobody even hardly puts that into their models. there's just not a lot that is perceived going well for Tesla. And I think that puts the shorts in a vulnerable position. I think that puts anyone that is super bearish on Tesla in a vulnerable position, because unlike Netflix, unlike TSMC, unlike ASML, Tesla is the worst performer in the S&P 500. It's nowhere close to all-time highs. Tesla, if Tesla gave you the equivalent report of what Netflix just did, Tesla would be up 20% following earnings, because nobody would be expecting that. And I don't think the numbers are going to be great for Q1. Let's be honest there. I'm not expecting that. I don't think Tesla needs good numbers for Q1 to actually rally. It's all going to be about the guidance and what's to come as far as profitability. If EPS estimates for 2024, 2025, and 2026 can stop falling, meaning Tesla just becomes more profitable or is expected to become more profitable, that's going to be great news. Now, I think the robo-taxi situation will also be seen as good news as long as the Model 2 is not delayed for the consumer for all too long, right? If Tesla says they don't know when the Model 2 is coming, that could be some bad news. If they say 2026, 2027 for robo-taxis, that could be bad news as well. My expectation is second half of 2025, Tesla is aiming to launch the robo-taxi network. I think that can be a huge upside catalyst for Tesla. I do think in the meantime, Tesla is trying to become more profitable, hence the layoffs and reducing the average work week for Tesla employees in China, hence the Tesla no longer offering discounts on existing inventory. There's so many different things that point to Tesla is becoming more profitable, but Wall Street is so bearish, they don't even want to think that's a possibility. I mean, the short position in Tesla is at multi-year highs. I do think Tesla is ultimately set up for a rally in that sense, and even if big tech stocks do fall next week, you might just see a rotation, okay? If big tech falls on their earnings, you could see a rotation into other areas of the markets. Even consider potentially 10-year treasury yields starting to fall as well. I could imagine where the Russell does well, the NASDAQ does very poor, the S&P does poor, and the Dow does poorly. Because if you see investors selling big tech and buying other stocks, the weighting's in big tech. So your indexes could decline here, and a stock like a Tesla could actually do well from here. I wouldn't assume that even if the markets fall, or just because the markets fall, Tesla has to fall. I think you've priced in way too much bad news. But is it possible that Tesla and broad markets sell off at the same time? Of course. Of course. Probably likely. But it wouldn't surprise me if Tesla could rally 10+% on earnings and the markets even sell off. But again, anything is possible here. My expectation is you're going to fall lower, but it wouldn't surprise me, maybe early next week, maybe Monday of next week, you do see a bounce. As far as tomorrow, probably is going to be quite the red day. Now, I did make a trade on Tesla today. Obviously, this is not a recommendation. 85+% of options expire worthless, so odds are you'll lose all of your money, and then there's a chance you make a lot of money. That's the risk you take with options. I did go out and I bought one of these contracts. It is a May 10th 165 call on Tesla for, I spent $420, wink, wink. And bought this trade today, down about 6.5%, but I do strongly believe Tesla will rally after earnings. And if you don't, I think maybe the whole entire thesis around Tesla changes at that point. Because the only reason Tesla would not rally after earnings is if Elon and the Tesla team said, yeah, we might cut prices again. Number one, that would be bad, and that's not something I'm expecting. So I don't think the bulls would like to hear that. I don't think that is priced into Tesla stock at this point, especially given the recent actions we have seen from Tesla, which look like they're trying to become more profitable. And if Elon and the Tesla team canceled the Model 2 outright for customer deliveries or really extended that out to like 2027, 2028 or beyond, I think that would also be another reason that Tesla stock could fall. And those things could be potentially investment altering theses. Okay. And that would not be great. And that's not my opinion necessarily. That is this individual's opinion. David Barron, a portfolio manager at Barron Capital. He says, quote, "The Model 2 is a crucial piece of our thesis. If they stop that, that is investment thesis changing." That would not be great. He oversees the $1.4 billion Barron-focused growth fund. And he said he would be, quote, "very surprised if Tesla's Model 2 is taken off the table," and said growth will accelerate with the new car. And again, another reason why I'm super bullish for this earnings is robotaxi is really not even a topic of conversation for a lot of big money. And I think Tesla is going to give us a reason to really start paying attention to the upcoming robotaxi network and that event on August 8th. I'm not expecting the network's going to launch then. I'm expecting about a year later it will launch. So I think I'm pretty conservative. But anything before second half of 2025, as far as robotaxis, if I'm probably the most bullish person you know on Tesla, and I'm expecting the second half of 2025, if Elon says anything sooner than that, oh man, that could be really exciting. With that said, again, on a technical basis, Tesla stocks likely going to fall into the high 140s, maybe down to about 147. That's where this support line is here. Wouldn't surprise me if that even happens tomorrow. Tesla stock at $149.13 here in after hours. Personally, I think this is a sell your kidney and buy as many shares as possible kind of moment. But hey, what do I know? Tesla stock could fall into the 130s if you do have bad earnings. But right now, you're just so washed out in Tesla. I want to caution you to kind of think logically about your bearishness. Just think logically here. You've already priced in so much bad news. Odds are a lot of that bad news being priced in is probably unwarranted. With that said, guys, that's going to conclude this video. Hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. And if you guys want to come trade with us live in real time, check out the link down below in the description of this video. Of course, I showed the losing trade in this video, but we have been trading NASDAQ puts on this entire drop so far. So we've made quite a bit of money there. And again, I think there's probably more downside left in those trades. So if you guys want to see those, check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.